Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Wednesday, November 26th, the pre-Thanksgiving edition of the Revere Roundup Daily Market Insight video. We'd like to wish a very happy Thanksgiving to everybody out there. I know I've got a ton of stuff to be thankful for, especially this fantastic job that I have and all the clients that are aboard this ride with us at Revere. So it is 5:43 p.m. Eastern Time, and I'm coming to you from St. Augustine Beach, Florida, with tonight's Revere Roundup Daily Market Insight video. State of the market went back to uptrend yesterday. The trend gauge over here, hard to believe as quick as we did, we went from growth mode to protect mode and now back to growth mode on leadership. The short-term 21-day moving average and medium-term 50-day moving average. Long-term 200-day moving average stayed on green. We allocate resources depending on the state of the overall indexes versus these three trend timeframes, and also depending on how market leaders were doing. And as of last Thursday's close, we were out of all leadership positions except for some gold positions and an allocation to the S&P 500. But market turned on a dime on Friday with the expectation, based on some comments by one of the top three guys at the Fed. His last name is Williams. The market stopped going down, started rallying on Friday, and it's continued for the 3 days this week. This is traditionally a strong week in the market, and check that box off if that's what your expectation was. So, what happened today? Fourth day of broad strength off of that Thursday low. That Thursday was a big gap up and massive reversal on Wednesday night's NVIDIA earnings. But the market seemed to change his mind, and we will change our mind to stay in sync with the market because it is the final arbiter. There's no use arguing with it. So here are the numbers for the day. The 21 over 21, solid strength in these leaders. One of really that's why we put leaders back to growth as they continue to act well. We did have, despite getting stopped on everything, an easy time creating our Turbo 12 and 2121 leaders list, and they continue to excel this week. So 2121 up an average of 1.74%, 15 up, one neutral, five down. The Turbo 12 up an average of 1.34%, nine up, three down. The Big 8 up an average of 0.63%. The RG8 up an average of 1.21%. S&P 500 had a nice little gap at the open, sold a little bit, but put in a low right at 10 o'clock, had a strong morning rally, and then just sideways action for the afternoon. Closed up a nice 0.69%. Equal weight also right there with it, up 0.7%. NASDAQ 100 up 0.88, equal weight up 0.66. Dow up 0.2%, mid caps up 0.6, Russell 2000 small caps up 0.8, Global 60/40 stock bond up about 0.5%. The flagship GROTECTION portfolio up 0.74%, TurboTection up 0.93%. Let's get into the charts, and we start here with the S&P 500, and they say V recoveries don't work. There have been more V recoveries over the last couple of years than I care to count. But here is another one. And here's the big reversal last Thursday after NVIDIA's earnings. And then here's the Williams, we'll call it the Williams bounce. What would follow after that Williams bounce? We don't guess, but we're happy to see the 3 days after that, this making the fourth day, recovering the 8-day moving average, recovering the 21-day moving average, recovering the 50-day moving average. And the 21-day spent 3 days below the 50-day, but curled back above that level again today. So we've got the configuration that we want. And we're seeing, because of this pattern in the indexes, we're seeing quite a few double bottom bases. So more leaders setting up, and that's great for the overall market. We're now in the most bullish seasonal period, and plenty of stocks recovered over the last 4 days. Would not be surprised, and I'll talk about it when we get to the tail of the tape if we see some sideways action, but you don't argue with what the market's telling you. NASDAQ, let's go to equal weight S&P first because this looks pretty darn good too. Note the relative strength over the last 4 weeks. Not quite at all-time highs and certainly not anywhere near all-time highs on a relative basis, but cleared all the moving averages. We still have the 21 below the 50 as indicative from this. That's a leftover from this period of underperformance, but certainly headed in the right direction. Let's go to the NASDAQ 100. Good stuff here. Reclaim the 8, the 21, and the 50. Still lagging on a relative basis. That double bottom is there as well. It's not a true double bottom because it's compressed versus the normal double bottom time frame, but what you're seeing is the lower low and a point at which we would get back above that midpoint that I drew. So keep an eye on that. And with this downtrend line break here, we saw a lot of downtrend line breaks today in stocks that are exhibiting leadership qualities. And a lot of them are just AI names coming back. Will they come all the way back? Well, the way to gauge your stock is to look at where it is relative to that gap up on last Thursday. That was the an inflection point. That was the near term high. The other inflection point is Friday's low. So let's go back to the S&P and take a look at that very quick because we recaptured the high of that day. We undercut and reclaimed on Friday the low of that day. So that entire day has now been a lower and a lower high. And that's a level on any pullback we want to keep an eye on because it was also the high of yesterday. But the patterns being put in are bullish. We can't argue with them. You can try to do that at your own peril. Here's the Dow, not a double bottom because it made a higher high while the NASDAQ was lagging during this period and money flowed into value names. That's why the Dow made a higher high, but configured great here as well. The 21 never broke the 50-day. Now it's curled back up, and we're above those key moving averages as well. Let's go to the S&P 400 mid cap relative strength over the last week and a half here, not quite at recent highs, but also doing it as well. And, up 4 days too. The 21 still below the 50-day moving average, however. And again, that's left over from the relative weakness. Let's go to the Russell 2000. Not really the double bottom pattern we're looking for here, but really strong bounce this week. Small caps love lower interest rates. They hated them when we were wondering about it, but they're loving them now. And here's another V-shaped claim. And here, because that big reversal on Thursday was more tied to NVIDIA and the AI data center names, we blew past that on Monday. But when we go through the individual names, keep an eye on what's above the high of last Thursday, as that was the inflection point, most recent high. So those are the major indexes. Let's go to some inter-asset correlation, and we'll start with the VIX. And this is a beautiful thing, 17.19. The 19.5 is the long-term average. We had a spike here. I read a popular thread on Twitter that since we drew down 10% on the VIX on Monday to expect a red close on the S&P 500 one of the next 2 days, that did not materialize. They said historically there was an 80% chance that was going to happen. Well, it fell into that 20% category because we had two nice up days. So there's the VIX. Let's go to the dollar. Dollar coming off a little bit today. Really, it's in a big consolidation. This is kind of like a big cup and handle looking thing here. We break above this 136.36 level and stay above it. We're into not as much resistance as we're dealing with here currently. and that is normally a drag in the market, and that's something we'll keep an eye on. Strong dollar is also typically, I say, a drag on precious metals. But the dollar pulling back here, and let's go to those precious metals. We're in GLD, Nugget, and Turbo added silver to it portfolio today, but nice support along the 21-day moving average here for gold, moving off of there, showing relative strength while the market was pulling back. Here's GDX. We own the two times this, which is NUGT. Really nice action Monday, nice tape consolidation on Tuesday, blasting through this high that it made 2 weeks ago, and now with a high with an eye on this 85 level, the recent highs during this really nice move up that we completely missed, but not missing it this time. Silver SLV. Nice gap up, closed at the top of the range, up 3.71%, also approaching these highs. Now, note I drew that double bottom. That doesn't apply here. This is more cup and handle. We didn't make that lower low in the precious metals the way we did with the indexes. So that's relative strength right there. Let's go to bonds now. BND, the broad bond index, kind of tight trading today. TLT, the long bond was up higher, which means the TYX 30-year yield is lower. The 10-year, not a whole lot going on there. We're in a big consolidation with these yields as well, now down toward the bottom of that range. We're, as always, keep an eye on it from a technical analysis basis on range breaks and see if that carries over to the individual market. That's it. That's it for interasset correlation. Let's go to the tail of the tape. We love seeing the stochastics on the indexes all pointed up. Same thing with the RG8. Really nice to have the Nasdaq McClellan Summation Index hooked up at yesterday's close. They don't update it until after 6 p.m. Eastern time for whatever reason. Some people have it in real time. I don't. But anyway, NASI hooked up. This is a tailwind for stocks. However, the percent of stocks against the 5-day, very stretched. 91% of S&P stocks above the 5-day, 90% of NASDAQ. Caution, Will Robinson. But hey, 4 days up, you kind of expect that. So a pullback is expected, but not guaranteed. Back on the bull case with multiple closes above the 21-day moving average. FOMC, 85% of a 25 basis point rate cut at the December 10th meeting. He's coming into today, no changes between the 21 and the all-time highs for the S&P, the NASDAQ, and the Russell. We're between the 21 and the all-time highs. Day count from up 3 to up 4. Second close above the ADMA and the 21 EMA. Still high on the S&P ATR at 1.41%, but the VIX at 17.19 is pointing closer to a 1% ATR. So we're looking for this, which has kind of been going sideways, slightly trending higher because of the recent wider ranges, but those ranges from 21 days ago are falling off, and we would expect this to start dropping. Sectors today, 10 out of the 11 spider sectors were up, led by semiconductors, gold and silver stocks, and rare earth metals. To the downside, software and healthcare, the only one of the spider sectors, but this has been the leading sector. So maybe a bit overheated there. Portfolio updates, GROTECTION. We've got rules. When we're above all the moving averages, one rule is to have at least a 0.6 beta on the S&P 500. The other is look for the leading stocks that can get the rest of that beta above a 1.0, with us being above all the moving averages. This is how we don't argue with the market. And that resulted in some buys today. GROTECTION bought MU and REMX, that's the rare earth metal ETF, added to prior buys Light and Google. Turbo bought SPXL, TER, Silver, Lemonade, and Caterpillar, and added to Sienna and COHR. So GROTECTION has 1.06 volatility adjusted beta, 5.65% balance at risk. That would be if all of our stops got hit. Turbo 1.14 volatility adjusted beta, 5.99% balance at risk. But the bottom line, broad rally continues for the fourth day during this traditionally strong week. Markets are obviously closed for Thanksgiving, but keys for Friday stay the same. The S&P support at the bottom on the 21 day and all-time highs resistance. Same thing for the NASDAQ and the Russell 2000. Let's get to some individual charts, and we'll start off with the Turbo 12 here and see how these have been acting. LabU continues to just run higher. Grail is at the Holy Grail. Well, maybe that's what they're calling it. Nice ticker symbol here. Developing technologies for early cancer detection. Breakout 2 tight days after that. That looks strong. SQM consolidating above the 8 EMA. LQDA breakout from a cup and handle, and it's holding. CommScope breakout from a really tight range here, and continuing to trend higher. Tower Semiconductor at the top end of this 2.5 week base. Lemonade, that cool, refreshing drink. Nice tight formation here, headed toward the top of it and possibly a breakout. Sphere Entertainment also consolidating, but broke out of that consolidation today. Relative strength confirming that new high. GH Garden Health broke out last week and continues higher. Nice, very nice. This is perfect volume for a consolidation. Breakout after a well-received earnings report. 2 tight days of a pullback on lower volume. Yes, I know it's Thanksgiving week, but that's the pattern we'd like to see. GSAT bounced off the 21. Frog also bounced off the 21 after a nice earnings report 3 weeks ago, and DigitalOcean lagging a little bit after its earnings gap, but holding the 21-day moving average. So that's your Turbo 12. Let's go to the 21 over 21, and REMX is not in there, so I'll take a look at that one first. Here's the rare earth metal, a little bit of a cup and handle, tight base. Bounced off this power of 3, 8, 21, and 50-day moving average. Very tight stop with 3 levels of support there as we look for low risk entries to re-enter this market. This one jumped out today, so added that to the portfolio. Let's go through what we own first in the 21 over 21. And then the rest of them. So Google added to that today on this tight pullback, clearly a leader. Micron regained the 8 and the 21. Nice low risk entry there. Lumentum added to that today, showing really nice relative strength and clearing that 300 level. GDX, we own Nugget. We already looked at that. GLD, we own that as well. Already looked at it. Okay, here's the rest of them. SanDisk, a little bit lagging on a relative basis after this pullback, playing ping pong against a flat 21-day moving average. Added to the S&P 500 this week, but really didn't give it any juice, which is odd. It officially gets added on Friday, so looking for that as it was a very clear leader during the prior uptrend. Want to see if it can clear these recent highs over the last 3 days. Lilly continues to be a beast. Nice tight day of consolidation here near the highs. CRS regained the 21, tight action today. Insight bounced off the 21. Las Vegas Sands, nice multi-day, 2-week pullback here. Bounce, didn't quite get to the 21, looking good there. First Solar ping pong along the 21, but moving out from that consolidation. And, note where it wasn't tech, it's not really AI data center because solar requires too much of a footprint. Although there are solar panels on most of these roofs of these data centers. But it did clear this little recent consolidation. Intuitive Surgical, top of this recent price structure within a long flat base. CLS regaining the 21-day. Caterpillar, nice tight action. 30% growth in their data center names. This is owned in TurboTection and undercut and reclaim of the tape moving averages along the 8 and the 21. Sienna regaining the key moving averages. Teradyne, great day today. I was my This was my heaviest position before that harsh pullback, but hey, look what it did today. Cleared the high of last Thursday. I'm looking for a pullback to get back into this. Coherent continues to recover. Southwest. Why is Southwest in a growth portfolio? Well, because it's growing earnings by 141% next year, and they've got two ends, which is what we always look for. And all of the airlines look good, really. Here's the relative strength here. Let's look at jets. Relative strength here, approaching the top of the base. But Southwest, as of mid January, will go to reserved seats. And along with that reserved seats, they are reconfiguring planes to take advantage of higher priced first class tickets, which have obviously a higher margin. So a couple of ends going on in there with Southwest, and it would be some nice portfolio diversification as well, as we typically lean toward growth in retail names and tech and retail names. EXE Expand Energy, several good looking charts in the oil sector, oil and gas, and this is one of them approaching the top of that cup. Uh, if home builders are going to come back in vogue because interest rates are rising, people are going to have to buy stuff for those homes, and Wayfair is acting very well since its last earnings report. Albemarle Chemical Company, lithium heavy and rare earths, looking fantastic. And finally, Rocket, big day yesterday, nice tight action today. Let me reactivate my alert above 20 for this. Um, Keeping an eye on this as part of the home building and home buying opportunities if rates continue to come down. Home builders, let's look at ITB, have been beaten up. And you can see how they've reacted the last 4 days after that news on interest rates. Here's a leader toll, very similar action as well. That's going to wrap it. As always, like to hear from you. Hey, please like our video on YouTube, and like, share, and sub everything on across all social media where we post. We appreciate it. It helps the algorithm. Um, if you'd like to reach out, become a client, contact us on our webpage, or you can email Don at revereasset.com or Dan at revereasset.com. Phone is 855 Real Wealth. That's 855-732-5932. We're very happy with the way our portfolios held up during this pullback. The S&P pulled back 5.1%. GROTECTION pulled back a little less than 6%. Now we get our exposure back on using low risk entry points as long as we stay above the 821-day moving averages. Pullback to there would be welcome on Friday or early next week, but buying, a lot of buying going on this week. And yes, I know it's on lighter volume because of the holiday week, but you don't get penalized because of light volume, only price pays. And with that, I will wrap it for Wednesday, November 26th. This is Don Vandenbord with Revere Asset Management, reminding you it's not how much you make in the market, it's how much you can keep. Thanks for listening, and have a great day.